Hello, everyone. Welcome back to Financial Thinking. I'm Robson Andrade, and today we're going to dive into how to safely invest in cryptocurrencies. Investing in crypto can be both exciting and challenging, but with the right strategies, you can navigate this market confidently. Let's get started. Understanding the basics. Importance of research. Knowing the market trends. Understanding different types of cryptocurrencies. Before investing, it's crucial to do your homework. Understanding market trends and the different types of cryptocurrencies available will give you a solid foundation. Bitcoin and Ethereum are the most well-known, but there are thousands of other cryptocurrencies, each with its own unique features and potential. Researching and staying informed about the market will help you make more informed investment decisions. Setting investment goals. Determining your investment goals. Short-term versus long-term investments. Allocating funds wisely. Setting clear investment goals is essential. Are you looking for short-term gains or long-term investment? Your goals will determine your investment strategy. For short-term investments, you might focus on more volatile cryptocurrencies, whereas for long-term investments, you might choose more stable options. It's also important to allocate your funds wisely. Don't put all your money into a single cryptocurrency. Diversification can help reduce risk and improve your chances of success. Diversifying your portfolio. Importance of diversification. Examples of diversified portfolios. Balancing risk and reward. Diversification is a key strategy in any investment portfolio. By spreading your investments across multiple cryptocurrencies, you reduce the risk of losing everything if one cryptocurrency performs poorly. For example, you could invest in Bitcoin, Ethereum, and a few promising altcoins. This way, you balance the potential for high returns with the stability of more established cryptocurrencies. Risk management. Understanding and accepting risk. Setting stop-loss orders. Regularly reviewing your portfolio. Investing in cryptocurrencies is inherently risky, but understanding and managing that risk is crucial. One way to manage risk is by setting stop-loss orders, which automatically sell a cryptocurrency if its price falls below a certain level. This helps limit your losses. Additionally, regularly reviewing and adjusting your portfolio ensures that your investments align with your goals and market conditions. Remember, it's important to only invest what you can afford to lose. Choosing the right platforms. Importance of using reputable exchanges. Features to look for in an exchange. Examples of popular exchanges. Choosing the right platform to buy and sell cryptocurrencies is vital. Look for reputable exchanges with strong security measures, user-friendly interfaces, and good customer support. Some popular exchanges include Binance, Coinbase, and Kraken. Each platform has its own features and fee structures, so choose the one that best fits your needs. Ensuring the security of your investments should always be a top priority. Storing your cryptocurrencies safely. Different types of wallets. Importance of securing your private keys. Best practices for storage. Once you've purchased cryptocurrencies, storing them safely is crucial. There are several types of wallets available, including hardware wallets, software wallets, and paper wallets. Hardware wallets, such as Ledger and Trezor, offer the highest level of security as they store your private keys offline. Regardless of the type of wallet you choose, always ensure your private keys are secure and never share them with anyone. Implementing best practices for storage will help protect your investments from theft and loss. Keeping up with market news and trends. Importance of staying informed. Reliable sources of information. Impact of news on the market. The cryptocurrency market is highly dynamic, with news and trends having a significant impact on prices. Staying informed about market news, regulatory developments, and technological advancements is crucial for making informed investment decisions. Follow reliable sources of information such as CoinDesk, Cointelegraph, and major financial news outlets. Being aware of the latest developments will help you anticipate market movements and adjust your strategy accordingly. Advanced investment strategies. Dollar cost averaging. Staking and earning interest. Leveraging DeFi platforms. For those looking to delve deeper into crypto investments, advanced strategies like dollar cost averaging, staking, and using DeFi platforms can be beneficial. Dollar cost averaging involves regularly investing a fixed amount of money, regardless of the cryptocurrency's price. This strategy can reduce the impact of volatility and help build your position over time. Staking involves holding certain cryptocurrencies in a wallet to support the network's operations, earning rewards in return. DeFi platforms offer opportunities to lend and borrow cryptocurrencies, providing interest and liquidity to the market. These strategies can enhance your investment returns while managing risk effectively. Avoiding common mistakes, emotional trading, falling for scams, neglecting security measures. One of the biggest challenges in cryptocurrency investing is avoiding common mistakes. Emotional trading, driven by fear or greed, can lead to poor decision-making and significant losses. Always stick to your investment plan and avoid making impulsive decisions based on short-term market movements. Be wary of scams and fraudulent schemes promising high returns with little risk. Conduct thorough research before investing in any project. Lastly, never neglect security measures. Use strong passwords, enable two-factor authentication, and store your cryptocurrencies in secure wallets to protect your assets. Tax implications and legal considerations. Understanding tax obligations. Staying compliant with regulations. Consulting with professionals. Investing in cryptocurrencies comes with tax obligations and legal considerations. It's important to understand your tax responsibilities and report your cryptocurrency transactions accurately. Different countries have different regulations regarding cryptocurrency taxation, so staying compliant is crucial to avoid legal issues. Consulting with tax professionals and legal experts can help you navigate these complexities and ensure that you meet all regulatory requirements. Keeping detailed records of your transactions will also help you stay organized and prepared for tax season. Long-term outlook and market predictions. Potential future developments. Expert opinions and forecasts. Preparing for market changes. The future of cryptocurrencies is full of potential, with ongoing developments in technology and increasing institutional adoption. Experts have varying opinions on the long-term outlook, but many believe that cryptocurrencies will play a significant role in the future of finance. Staying informed about expert predictions and market trends can help you prepare for potential changes and make strategic investment decisions. As the market evolves, new opportunities and challenges will arise, making it essential to remain adaptable and proactive in your investment approach. Conclusion and call to action. Recap of the points covered. Encouragement to subscribe to the channel. Teaser for the next video. And that's it for today's video. We covered the basics of how to safely invest in cryptocurrencies, including setting goals, diversifying your portfolio, managing risk, choosing the right platforms and storage methods, and advanced investment strategies. If you enjoyed the content, don't forget to like, subscribe to the channel, and hit the bell icon to receive notifications of new videos. In our next video, we'll explore the exciting world of DeFi and how it's revolutionizing finance. See you then, and thanks for watching.